Welcome in, you trader nerds. It is another fabulous Monday, one of my favorite days of the week, because we get to do away with those selfish weekends where you and I have nothing to do but sit here and mope and groan and complain and spend time with our families and go, oh my gosh, well, the market's not open back up. Here they are, and we are down 1/4 of a point. How about it? And our little things are working just as they should. You remember the days we'd be down? Our accounts would be up. We'd be up and our accounts would be up. We are back, ladies and gentlemen. Now, let's go through what our plan is, okay? Let's go back to it again. Make sure everybody's on the same page. So 95% of our time is spent on step 3. Let me see if I can pull up our steps again. Steppy. We're having trouble connecting. Of course you are, because I need you now. But here's what we do. We know what we do. Here's our little plan right here. Our whole little plan. I said, here's our whole little plan. And let's open up. We sell options premium. We allow the theta to decay. That's our daily profit. We manage the chaos around the collection of theta, and we rinse and repeat. And we just do it over and over and over to a point that it's almost mundane and it's almost boring. But this right here is where you make your money, right here. Now, is Ryan in here? Ryan is doing some really groundbreaking research for us. So Ryan, correct me if I'm wrong on this, but on $1 million account, during the COVID crash, it was down doing the 111 and 112s. It was down like $600,000. But the VIX hedge was up 400,000 or something like that. 400,000. Brian, correct me if I'm wrong. Come in any moment. But that still gives you a $200,000 loss in $1 million account. Now, the groovy thing was that the market was down 35% during that time. So that's good for me, because here's how I retired early is 100% of my money is in SPY, right? It's in the SP 500. So 100% of my money in the SP 500, I would have been down 35%. So you're telling me, Ryan, please correct me if I'm wrong. Is Ryan even in here? If I could be down 20% with our little strategy, then I'm happy with that, right? Now, here's what he is now going to go back and put into. He's now going to go back and he's going to do additional research to say, okay, what if I had managed my deltas though, and I had sold futures to keep my deltas flat? And I have a feeling that when he comes back with the groundbreaking research, he's going to show that our 200,000 loss was much less. Okay, that's what I think is going to happen. So he will present that to us, and Ryan's going to have his graduation ceremony, hopefully not this Friday, but next Friday, from the mentorship. But he's doing some really groundbreaking research for us to figure out what would have happened during COVID, because that's our worst case scenario, y'all, is the COVID crash. If that were to happen again, how do we survive? The managed chaos is 95% of our time. This is easy. Selling options, collecting theta, rinse and repeat. Managed chaos is where we're going to make our millions. All right? And I believe we will. So let's see. Here we are. Market's down 0.26%. Let's see what the big green monster looks like. What's it saying, baby? Big green monster is saying probably that we're still around that inflection point of our zero line. If it would pull up, here we go. Yeah, and that's exactly what it's saying. It's still at the inflection line here of 0%. Wow, something looks weird, doesn't it? I thought we had big gaps in there. We had some gaps, but where'd all my gaps go? I don't see a lot of gaps now. So this is saying that we are over, what are we, oversold for the fair value zone above it. So this is kind of saying, hey, Bob, we should go up now. Now, remember, I've been saying we were going to go down. Now I'm kind of looking at this and going, I don't know, man. It's kind of saying we're going to go up now. Now, the point of control is always a magnet. right? We're always thinking that we might go to the point of control. Problem is the point of control will soon be here. This red line you will see move up to here. So that gives us a little bit of a base there. And so probably, I don't know. Who knows? I really don't even care. Do y'all care where the market goes? Who cares? Let's see what our, what do you call, linear regression channel looks like. Linear regression is still up and away. So, bullish to flat, even though I was bearish on the other day. And indeed, bearish is coming to fruition today, aren't we? We're down 0.24%. Nothing burger. All right, so let's go to our counts and let's see how we're doing today. Look at this little thing here, y'all. Isn't this great? Oh, look at her. 98% probability of profit. Fall, baby, fall. Right? This is where 95% of our attention lies, though. This is easy. This is where we have to get better. So we're at 36,939. 36,939. 36. Oh, yeah. Look at the weekend decay come in. 36,939. Fire up the band, Roger.
Well, we're moving on now. Moving on up to the
yes, hallelujah. Speaking of apartments in the sky, 10 of us from our little group are going to meet in Atlanta on May 11th, 12th, and 13th, and I cannot wait. We're going to go to Applebee's. We're going to have just a fun time. So we are at 41 deltas, 44 theta, 41, 44, 41, 44. Market go down, this gets bigger. This, we collect our theta, theta goes down. We're at 0.12. VIX is at 17, believe it or not. And our buying power usage is 11, 6, 10. So we're counting the money. Oh, man, y'all, that is beautiful. Look at this. Oh, there's no need to do anything, really. But the one thing that we need to do is to do our VIX hedge today. So we're at 36,939. We need to buy $92 worth of VIX calls at 10 delta. And if you've got my spreadsheet, if you're in our Discord room, you've got our spreadsheet. It keeps up with this and tells you what we need to do. So let's go and let's do it. You know what I'm saying? I don't know why I recorded it here. I never recorded in this. So let's go to our VIX hedge. VIX hedge. If it can give us $400,000 protection in $1 million account, it is worth doing, y'all. So, see, here's why we're doing it today, because today is the 120th day. I've already got a VIX call here, so we're just laddering these in. So I got $92 to spend. And go to Delta. Normally, I use percentage of in the money. I do not use that on this. I go to the 10 Delta. Now, there's some people saying, hey, Bob, why don't you go closer to the money and just use all your money there? Okay, you can, but we did a little back test or something that showed that having multiple contracts at the 10 Delta were better than having something up here. So if I go to the 10 Delta, this is about this. So 47, let's go this 9 Delta, 47, the 60s call, and let's buy 2 of those. So that'll be what, 94 cents, right? So let's buy 2 of those. We'll try to go in at 45 cents and put our little hedge in, replace. That should fit. Boom, baby, we are in. We are in. Just the cost of doing business. I lost focus of what the VIX hedge was for. I was sitting there thinking, that even though my research shows what it was about, the VIX hedge is not to make money. The VIX hedges allow us to stay in our positions that make us money. That's what its purpose is. Okay. So we're doing great in this account. Let's close it. Nothing more to do here. Let's go to the other one. Go to Crimson. Crimson, the color of blood, the color of the Alabama Crimson Tide. 35,449. 35,449. 35,449. I said 35,440. Oh, look at this, y'all. 35,449. Fire up the band, baby.
Well, we're moving on now. We're moving on up to the side. To
Now, I know what y'all are thinking. Bobby's only up 4% on the year. Okay. That's for 4 months, y'all. So we should be over 4% for this month. Do you know that's Bernie Madoff numbers? That's what Bernie did. Bernie did 1% per month, 12% a year, year after year after year. And if you can do that, you can track millions and billions of dollars of capital, except his was a fraud. Ours is not a fraud. Ours is actually stuff that we're doing. Y'all see it every day. So we're up 3.93%. We're looking really, really good. So let's keep this going. See what our Greeks and ratios are. Oh, Bernie Madoff, the man. All right. God rest his frivolous soul. So let's see what we're doing here. Let's see. Anything I can read on Bernie Madoff, I just love it. I'm intrigued by it. I just think, how do people trust someone like that? I don't know. So this is 31 minus 2 is 29 36s. 29 36. 29 36. Y'all don't trust a thing I say. Verify. But we show it all here. Buying power is 99.66. 99.66. Beautiful. Oh, look at that, y'all. Oh, this is what we call pretty. That is a pretty account. Green, and more green. So I could put on a trade today if I want to, or I can take it a little easy. Now, I met with Ryan this morning, and Ryan was saying, Bobby, what do you mean take it easy? Well, when the VIX is low, we're going to get that VIX spike again. Let's go look at it. It's coming. So you don't want to be heavy in the market right now. You just want to have enough theta in there as possible. But when it gets this low, what's happening. It's going to go back up. It's a matter of time. Now, it can stay here for months, though, and months without going back up. So you just need enough fuel in the tank to keep this thing going. So let's say, let's put in our VIX hedge and see how bad that hurts us on our theta. And I may just put in another trade. So let's go to our VIX hedge tab. So here's our net lick. It figures out how much we should buy. So $89 is how much. So about the same thing in the other account, right? So let's go to VIX. I said let's go to the VIX. 120 days. That's where we put them. And we'll go to the 10 delta, which is that 60 delta, right there. 10 delta, 60. So we're going to buy 2 of these. We're going to try 46 cents. Put in our VIX hedge. Come on, baby, fill me. Fill me. Be careful who you yell that around, because someone may give you a feel. All right, here we go. So we're in at 47. So did Tasteworks made me go up a nickel on that thing, didn't it? All right, so let's put him in his little group. And let's see what that did with our data. So let's put him in the VIX hedge. Move to group. VIX hedge. Beautiful. So now, did that lower our data? Data now is 3409. It did lower our theta. So let's go back to here. 34. That's probably going to make me blue, right? Yes, it makes me blue. So I'm more prone to put on a trade today. Now, first of all, before we put on trades, is anything saying that we need managing over here? I'm looking for auto close signs. Nothing at all. So everything looks good. So let's go and let's do a 112 in this account. So we will go and build it in this platform because Tasty is better to build it. So let's go to the macros. Is Ed in here today? Do y'all know where Ed is? Ed is at Disney World, of all God's places, and he's going to be there for 2 weeks. 2 weeks. Unbelievable. All right, so let's see. MES, let's trade. I mean, you talk about big money, y'all. I mean, that's Ed. Ed, he's a big dog. All right, so where do we want to go? We got 60 days without going under. So this is 60 days. Let's make sure though, because sometimes these DTEs are messed up over here. Let's make sure we do have a 60-day. Yes, we do have a 60-day. So let's go to 60. You can't hide big money, y'all. You just can't hide it. Ed visiting the mouse. All right, so we want to move that down to 975. Wow, do I not have anything else there? So 975 would be 40, 40, 39.90. 40, 40, 39.90. 40, 40, 39.90 for our put debit spread. Roll, baby. 40, 40, 39.90. 40, 40, 39.90. 40, 40, 40, 40. Want to buy that one. And we want to sell the 39.90. But that don't look right. Why is that 11.50? That 50 wide? No, that's 50 wide, isn't it? Huh. Well, let's make that cheaper. That ain't right. Let's see, 39.80, 40.30 is 11. Good Lord. Let's go down lower. So let's go 4,000, 39.50. That's $10. Let's go down one more. Let's go down to 39.90, 39.40, which is where we did it the other day, right? Yeah. Let me make sure I'm not trading on my toes. So 39.90, 39.40. I thought I did that the other day. Did I not? Rick's here. He'll know if I did it. Where's my darn order at? There it is, 39.90, 39.40. So let's see if we can get into that for 10.975. I'm in micros. Okay. 39.90, 39.40. Let's put that on a spreadsheet. $39.90, $39.40. Didn't do much this weekend. I don't know about y'all, but we had a great time just, waiting for the market to open back up, as we often do. I'm disappointed that Evan is not going to be making it to Atlanta. He's got a prior commitment of all things. Why does that not work? Oh, here we go. Micros. We did one tranche, and we'll call this PDS 35. Beautiful. All right, so now we got to sell some stuff, and we're going to do a 112. 2 contracts, NP 36, which means this should be 36. Go ahead and put everything in I can. Make 60, 4, 17, 23. And let's see what we can sell. So I like to get about $12. Well, hello, ladies.
Hello, ladies.
Yes, hallelujah. Where's it at? There's about $12 there. So we got here, I don't know, 35.75 looks pretty good. Let's do 35.75, 2 of those for 12.25. Come on, get me in. Yeah, 35.75, 12.25. 35.75, 2 of those at 12.25. All right. Now, let me go put those in their little group. Come here, little fellas. And so here we go. Unallocated, we've got our put debit spread. Put debit spreads and our nakeds. Beautiful. Now, let's also put in our, what do you call, fixed hedge. So we did the 60 calls at 120 days for 47 cents. Let's put those in. So fixed hedge. Number of contracts, we did 2 of these at 60, 10 delta, 120 days. We ended them on 4/17/23. And we got in the price of 47 cents. And why is that not working? Why is that not working? Dang it. Dang it. There we go. We've got 120 days left in that trade. Ta-da. All right. Beautiful. So let's see how we're doing compared to the market. Now, this doesn't look good. This is where you'll go, well, Bernie Madoff ain't that good, John. So we'll go to our realized returns over on this one. So we're at 3.93%. The market's at 7.13%, but we're catching them. We are catching them. And I believe we will overtake them. So we got 14 negative naked positions. We've got 10 put debit spreads, 22 contracts of naked, 16 contracts of put debit spreads. I really could use some more put debit spreads, to be honest with you. But, you know, Rome wasn't built in a day. We'll put some on at some point. So, all right, everything's looking good. So how much money are we up this time? We were at 34,299. So we were at 34,799. So we're up 34,799. 34,799. I can't do math in my head. 34,799. That's where we are. Plus we're at 35,449. So we're up $650. Okay, on the month so far. That's good. Halfway through the month. Good. All right, so that looks good. So nothing else to see here. Let's now go to our other little account. Our Bobby Beth. And we are at 84,495. 499. 84,499. Oh, yeah. Weekend decay, baby. Look at this. Praise the Lord. Fire up the band.
Moving on up to the side, to a deluxe apartment in the sky.
Yeah, when we're in our zone, when we're in the zone, we play that just about every day. So if you do not like the Jeffersons, you're not going to like trading with us. So we are at 70 minus what? 9 is what? 61? 61.78. 61.78. 61.78. Okay, little blue, 17. So buying power usage is at 23,387. Wow, that went down a lot, didn't it? So what this tells me is we can afford to put on some trades here for certain. So why don't we do that? You know, too. So let's go to the other account, to the Crimson account. Let's just do the same things we did over here. So let's go. Well, I'm going to make sure I'm not crossing over my strikes here. 39.90, 39.40. Make sure I'm not buying where I've sold and sold where I bought. 39.90, because there was one account I knew we did 39.90s and 39.40s. 39.90, baby. I can't wait to see y'all in Atlanta. Rick, are you still coming to Atlanta? 39.90, 39.40. Okay, I can buy where I bought and sell where I sold. Good. So no. It's wrong.
No, sir. Unfortunately, I'm not going to be able to come.
Oh no, Rick. I was so looking forward to seeing you.
Well, me too.
39.90, 39.40. That's fine. We can do that. Next time, Rick, next time. Maybe we'll have a fall get together. 39.90, 39.40. Where was I at? What was I doing? Okay, so what we want to do is we want to sell these, create duplicate order, and then what you do, guys, is you move the, I'm going to see if I can get 1250 because I'm a greedy capitalist. And let's go for the right account, Bobby Beth 203. Send. Come on, fill me. Nothing. Jack, squat, crap. Cancel, replace. 1225. All right, we're in. Now let's go. You know what? I probably could have done another tranche of that. Let's see. Let me do another one of those. Let's do 4 of those. There we go. So 4 of those at 1225. Let's go put that in. So I'm doing 2 112s, right? So we did 4 of those. We're really selling some stuff. We'll call this NP 45. And the strike was We did the 35.75. 35.75 for 12.25. Because this is the account, we're not doing as well in this account because I can't keep enough theta in it. And that's one of the problems in low volatility. It's hard keeping your theta in there. So that's naked. 60 days. That's why I did 2 contracts today. 4. But don't be a hero in low volatility environments. This is not where you want to be a hero.
Bobby, shouldn't that be 2 tranches and not 4?
This should say number of contracts. So yeah, it's 4. This actually should say number of contracts instead of tranches. Hold on, let me change that. But yeah, good catch. If it was tranches, it's 2 tranches. But I think I have this thing to where it's like, oh my God. I think that's right. But good catch. All right, MS. So we're going to do 2 contracts of put debit spreads. TDS 45, and we think those were 39.90, 39.40s. Puts debit spread 60 for 17.23. All right, so let's go and let's see. Go back to the other account. Crimsonator. And old Crimsonator, we did this one for 975. Create duplicate order. We're going to do 2 of these. And we're going to move it to the right account. Bobby Beth, 203. Send, baby. There we go. Yes, hallelujah. All right, so we got in there for 975. Isn't this fun? We just do the same thing over and over and over. I mean, there's nothing new. All right, so over here, let's go get our VIX stuff. How many VIX hedges do we need over here? So here we need to buy $211 worth of stuff. Good Lord, that's a lot. So let's do it. So let's go to VIX, $211. So we'll go VIX 120. And I think we said the 60. And you don't need VIX to hit 60 before this thing starts to pay off either. So remember that. So $211 would be what? 4 of these? 4 times 50 is 200. So let's do 4 of these. Ah, look at that. 4 60s at 47. So let's put that in there. I don't even know if this is right. I think this is from the one. I need to put my correct number of VIX stuff I've got in this VIX. So we did 4 contracts, 60 strike, 10 delta, 120 days, 4, 17, 23. And come on, baby, get your thing right there. Hey, we got them cheaper than last time. Of course, that makes sense with VIX being down, right? We got them for 47 cents. Ta-da! That's not right. $47.66. Let's see. If F6 is that, it's B5 times 100 plus the variable. That's not right. I6 times 100 times B5. Well, B5 is, B6. Wait a minute, B6. Hold on. Yeah, that number's not right. Why has that got a thing on it? That should not have an F4 on it. So that should be B6. 6. Jeez. There we go. So now let's move that formula down. And I don't know why that formula said B5 in little dollar signs. So let me fix that there. There we go. B5 times that. Okay. So you just want to kind of keep up with how much money I'm spending on that stuff. Right now, it's going to look bad at the end of the year because 3% of your net leg is going to be gone. It's just gone. But if you'll see what it did during the COVID crash, where a $600,000 loss was only a $200,000 loss, you're going to be glad. You're going to thank the good Lord above that you've got this trading. And you never know when it's coming. That's why you really have to have it on all the time. So let's go put our things in our little groupies. But do y'all see how in normal circumstances that we collect data every day? I'll make sure everybody got that. That's what we do every day. And that's why we play the Jeffersons just about every day. Let's put our vertical in our debit spread. And this is a naked. And this is a naked. All right, let's look and see if there's anything that needs management over here. And you just give you a quick glimpse of your trade tab and see if there's anything yellow or thing popping up over here that says you need to close something, and there's not. So let's sort and get that out. So we just want blank stuff. Move that out of the way. Beautiful. So there's our open trades. You do see that we have some put debit spreads that are about to come off. Go to our realized returns tab. And I don't have it fixed here. So I've got a lot put debit spreads and not a lot of naked positions. Okay, that's kind of cool. I don't know. Any questions at all? So today is the day, y'all. It is the day to do your put debit spreads. And it's really a good day because VIX is so low. I mean, you know, it's up 17 cents today, but it's at 17. Great day to put on your VIX hedge. Use 0.25% of your account. So if you had a $100,000 account, you put $250 in it. Y'all good? Well, we got a good group here today. We got 30 people here. We got any newbies? Anybody new or relatively new? Welcome in, and feel free to speak up. Oh, hey, Justin. Good. Glad to have you, Justin. Where are you from? OH, does that mean Ohio? Yeah, there you go, Ohio. Probably a Buckeye fan. Ken's new too. Well, hey, Ken, where are you from? New Jersey. Make sure that's a J. Yeah, New Jersey. All right, cool. So good to have y'all. So, and just remember, I want to go through it one more time because if you are new, you gotta need to figure out what we're doing. So what we do. Yeah, Matt's in Kentucky, right next to close to Ohio there. So that's good. Remember, we sell options. Okay. We collect data. And generally, if the market goes up or down, we make money just about every day, y'all. There's hardly a day goes by that we don't get to ring the register. Well, we don't ring the register, but we play the Jeffersons just about every day. Now, when we went to the triple nickel donkey, that was not happening because we got out of line with too many sweet Bobby hedges. So we managed the chaos. One of the things that we did today to manage chaos is we put on the put debit spread, which is a hedge, and we did a VIX hedge. Right? That helps to manage the chaos. That helps you in a $600,000 loss on $1 million account to only have a $200,000 loss when the overall market was having a 35% loss. And if you implement what we do with our trading plan, then you should even do better than that. And then we just rinse, repeat it. We just do it every day over and over. So make sure that you folks have the trading plan. It is in the room under written trading plans. And this is the latest edition that has all the stuff on it, what we do. And basically, what I want you to do is make it yours. Like if y'all should see Ryan's, I talk about Ryan a lot today. We had a meeting this morning. His is his. He's got so many different nuances in his trade plan compared to mine. But it's so cool, y'all, that we've got a plan and we know what happens. And what we are is we follow, and I know for those of y'all that are Ohio State fans, Justin, we follow the Nick Saban process, the love of the process. If you love the process, respect the process, trust the process, and if you'll follow the process, then you having a winning account is going to be an inevitable result, right? It's the process. So you've got a process that has every single step that you need in your trading plan. Now change it. If you don't like my metrics or you want to look at Vega, I don't manage Vega, put it in here. If you want a delta to theta ratio of 1 to 1, put it in your trading plan. Don't just use my trading plan. Put your name on it. Call it Justin's trading plan, right? And Justin's trading plan, because I contend any trade that you make that is not part of a plan, a written plan, is a dumb trade. And we don't want you making dumb trades. Remember last year I made dumb trades, and I had to apologize for it all year long. Ken and Ed were like, look, quit apologizing, Bobby, for doing the stupid stuff. But I did the stupid stuff, and not this year. I'm not doing DraftKings. I'm not doing, I'm just not doing stupid trades. I'm not scalping. I'm not doing the stupid stuff that I did last year. Let's look a final look at what our expected move is this week. Y'all, this could be the week that we have a little bit more expected move than what we would think. So normally it's calm for a couple of weeks, and then she blows and she gets a little upset because this market cannot be tamed.
Earnings this week.
Oh, wow. There's earnings this week and a lot of stuff. So that could help, right? As far as moving things. Where's my little stuff at? Where's my expected? Oh, here it is. So here we are in this little week, and you see this is the upward 41.98 on the SPX, and the expected move to the downside is 40.76. So we had everything working good last week before last week, everything looked good. This week could be the week that it decides to blow, right? To blow outside the expected move. So what I would say is keep your positions light. Don't overly do it. Don't be a hero in low volatility. Don't be a hero in low volatility, because what happens is when volatility rears its ugly head, your count's going to be down, and you're not going to be able to take advantage of increased volatility and put on additional trades. So keep it low, keep it light. Your theta numbers will automatically take care of themselves and increase volatility. Just keep it light. Keep it light. Because I would say that I did not do a good job of managing the account during the March Volmageddon. I didn't do a good job at all. I puked positions that I should not have puked. And I think what the VIX hedge allows us to do is not to puke positions. So at one time, you and I were up, y'all get tired of me hearing this too. We were up 9.65% just a month ago. So we're coming back. We went as low as what, 4.82%? Right. But now we are switching back up, and we are coming back out, and we're almost at 4%. So, lesson learned. I mismanaged some stuff, and I'll show you. Let me show you this, because this isn't pretty either. But I'll show you the good, the bad, and the ugly. Our weekly premium tab. Our premium capture on closed trades is only 5%. Y'all, that's horrible. It's projecting right now we'll have a yearly profit of $1,400. Our projected yearly return is only 4%. Looks like it wants us to have 27. And this is all based on what we did that was really, really bad, right? Our projected yearly return is 4%. Our win rate's only 41%. We do have a positive expectancy, but we just didn't do a good job. I puked positions. That's why my stats are so bad. So I didn't say I made stupid trades, but I could have made better trades had I done what I did back last September and just said, look, I'm just going to hold my positions. We're going to be fine. So I think we're back on a good track. Okay. All right, guys, y'all have a wonderful, wonderful day, and I will see y'all tomorrow.